Thank you.
Good afternoon. Welcome everyone to CedarIBSI's FinTech Labs Knowledge Roundtable. The topic for today is digital banking on onboarding, which I guess is a very timely topic, and I guess everyone will be quite excited to hear from our panel on this. As by way of introduction, my name's Fahad. I'm a principal at Cedar Management Consulting, and I'll be your host for today. I'll be moderating it. On board with me as panel, we have Indranil Basu Roy. Roy is the Chief Business Officer for Modefin. He has over 2 decades of experience in financial technology, and he's helped, develop a lot of growth strategies for several banks and financial institutions in APAC, Middle East, and Africa. Roy is joining us today from Singapore. So welcome, Roy. If you could give us a wave, please.
Thank you very much, Fahad, for having me here.
Great, happy to have you. Next up is Venkatram and Kishmurthy. So Venkat heads the Banking Strategic Business Unit at Explio Solutions Limited. He has over 2 decades of experience as well, delivering large-scale complex technology implementations, and he's worked with clients across geographies. Venkat's joining us from Chennai. Welcome, Venkat. If you could give us a wave and say hello. Right. We had a third panelist as well, Rahil from Code-Based Technologies, but unfortunately, due to a last-minute emergency, personal emergency, Rahil couldn't join us. But no matter, we'll continue. We'll try and give you something interesting and probably entertaining to get you through the hour. So the way the format will work is for the first 5 or 7 minutes, I'll take you all through a few slides, some interesting points on digital banking, and sort of just lay the context for the panelists to take over from there. After that, I'd request Roy to speak to us about his experiences through Modefin. So he'll speak to us for about 15-20 minutes, just take us through some of his experiences, play out some interesting use cases. So we'll hear a bit from him there. After that, Venkat from Explio will speak for about 15-20 minutes, take us through some interesting case studies and some solutions which Explio has up their sleeve. And potentially the last 10 minutes or so, we'll leave open for questions. We'll try and get in as many questions as possible from you, the audience, and try and get our panelists to try and answer them. So that's roughly how the hour is going to progress. So with that said, let me jump into some digital banking business models and trends, just so that I set the context for everyone today. Right. Now, the important thing to understand about digital banking is it's a bit of a catch-all phrase, right? And it's a bit important for us to define it correctly first, to try and understand what it means to different people. So before we go into that, I just wanted to sort of lay out what the different types of business models there are when we talk about digital banking. So if we look at the first column on the left, which is traditional banks providing some digital offerings. That's the first option. Second option is a traditional bank having a full digital arm. And the final option is a pure play digital bank only. So a neobank or a challenger bank as they are known these days. So let me just dive in a bit into each of them. The first one is traditional banks having a digital offering. What they essentially do is they leverage the existing brand of a bank and they will augment their branch banking with some online offerings. So the idea for them is to really empower their existing customer base, provide options across channels, give them some products and offerings which are almost similar to traditional bank offerings, but provided on an online channel. They do provide a a customer journey which is pretty straight through, but it's sort of made for a branching context. And the technology that they're typically leveraging is, legacy platforms with a certain amount of digital channels, brought into the top of that. I mean, there are plenty of examples of this model. Some in the GCC would be Adib or DIB, but I'm sure across the world there are tons of banks which are currently following this model. If I move to the second model, which is traditional banks having, a full digital arm, I think this is something which more and more, larger banks are kind of, evaluating, looking, can we move in here? Because they want to move from the first model, but they're not sure if they want to go all the way to the third model, which is, be a challenger bank. So the second model is something which more and more banks are really trying to embrace as we go forward. What this model really entails is you have a regular traditional bank, which is in place, but they launch a digital only arm. So the overall branding is almost a sub-brand of the overall brand, right? It's almost a subsidiary. They will leverage their existing customer base. They will leverage some of the processes that they have in place. But at the same time, they want to push the new mobile channels, right? So that they can really reach out to a wider audience, engage with potentially a more digital savvy audience. So that's what, the idea is from their point of view when we look at channels. In terms of products, there will be their entire product suite, which is on offer, but they try to complement that with certain products which are unique for their digital offering, for their digital only arm, right? So it provides a nice sort of blend in terms of the offerings that they have. In terms of processes, they do tend to follow what they have from the parent bank. So they will look at the customer journeys which are, currently developed and see how they can refine it. And from a technology perspective as well, there is a legacy platform which is in place, and they would like to sort of overlay the digital channels for that. Some of the more, well-known examples, in the region, there's Emirates NBD has Live, Bank ABC has ELA. And as I mentioned, more and more banks are, really going ahead and trying to evaluate if they should be moving into this space and into this model to cater to, some of the newer customer segments that are coming up. Now, if you look at the last model, which is a pure play digital bank, and, you can call that a neobank, you can call that a challenger bank, but that's a bank which is a native digital bank. It's built only as a digital bank. It didn't have a legacy of being a, a traditional bank. It's a full-fledged mobile bank only. So the branding as well is, purely digital. The customer experience that they are providing is heavily attuned to being a digital customer experience. The products will be, very simple, very focused, easy to sort of execute online. The channels will be mobile first always. Great channel interface, which is API enabled. In terms of the processes, it's almost completely straight through processing. It's, very well streamlined to fit in with the entire digital piece and the digital persona that the bank is trying to create. And even from a technology perspective, these platforms are really the latest fintechs that there are, heavily cloud-based as well. And as examples of these kind of banks would be your N26 or a Monzo or Revolut, these kind of challenger banks, which are really fintech-led, new age, nimble. And these are banks which are now, coming up in terms of really competing with the larger banks. So I thought it's really important to first, kind of set the context in terms of what the business models are in terms of digital banking. I'll just spend a couple of more minutes quickly to go through a couple of key trends in digital banking, globally, what we're seeing. The first trend is on digital customer self-onboarding, which, happily turns out to be part of the title of today's knowledge session. where customer onboarding is something which banks are more and more trying to push customers to try and do it in a self-onboarding way, right? So be it in terms of automated ID verification or KYC, leveraging some chatbots. These are things which, banks are really encouraging the customers to, self-service and self-onboard to help make it more efficient and to make our customer experience a lot better. So that's the first thing. If we look at the second key trend, I think there's a great focus on agility in terms of the distribution network that we're trying to build as banks, because what banks are looking to do is reach customers in probably geographical areas where branches are not available. So trying to, leap go above and beyond the issue of having an expensive branch network by trying to move ahead through a digital network. The third piece which we've really looked at is a scalable physical infrastructure. Now that's really important, and it kind of links with the previous point on network agility, is that as banks try to reach further geographically, right, it becomes harder to justify having a branch for a small number of customers. So if you're setting up a branch in rural India, for example, which doesn't have enough of a bankable population, it may not make sense to set up a branch if you're looking at it purely from a profit perspective. So the way to go ahead is to have a scalable physical infrastructure where we can reach out to different parts of the region where it's a bit geographically remote, but we can reach out through digital channels. So that's something. And the last few trends which we look at is the processes and tech partnerships are really kind of crucial when we look at it from a digital banking perspective. And I'll just speak about the processes for a minute, because many banks we've seen around the world sort of tend to focus on having a very jazzy front end. So yes, we are digital, we have a very, very snazzy mobile app, our internet banking is very attractive and aesthetically pleasing, but at the back end we're still moving paper around left to right, and it kind of beats the purpose really if your processes aren't really integrated with the entire digital philosophy that you need to have. The fifth point that I'd like to sort of bring up is in terms of the infrastructure, digital infrastructure. This is where I think cloud is really coming into play. So cloud-based infrastructure is really helping banks scale up in an efficient manner. People are looking to do scaling without really taking on board the infrastructure physically at their premise. So that really helps banks scale pretty quickly. And finally, in terms of integrations, customers are always looking for instant gratification and real-time updates. So the idea of having digital verification or digital KYC sort of linked closely and seamlessly with the offering that we have really sort of appeals to customers, as they go forward. So I think, I just wanted to set the context, lay out some, global trends, put on the table the different types of digital banking models that we have in place so that the context is laid. I will, hand over to Indranil to, take us through some of his experiences and, talk to us about some digital banking trends. Over to you, Roy.
Thanks, Fahad. Can you hear me?
Yes, I can.
Okay, fantastic. First of all, thank you very much, Fahad, for that a fantastic start and giving a great insight.
Thank you.
So again, thank you very much for having me here today. As you rightly pointed out that I think digital is the point of discussion right now in all financial service, across the financial services industry, whichever part of the world we go to. So from Moatfin perspective, so Moatfin has been there, we have been operating in this space for the last 10 years. And our philosophy has been that how we see, there is a lot of the current digital conversation has been restricted to a certain segment of population. Okay, either it's targeted towards high net worth individuals or the millennial population, which is fantastic, and that's there is a big potential in those segments. But what we feel, right from our inception, has been that for a financial institution to leverage the true value of digital, it has to put in a structure and capability which cuts across across the population base, and will be able and will enable them to tap into uh, population at large, irrespective of segments and population base. Yeah. So that's why, and to do that, uh, what we believe is very important for the bank to be continuously present in the customers' lives in whatever they do. So it's very important to make themselves omnipresent, right? Omnipresent in the customer's life in every activity that they're doing. And in order to make themselves omnipresent, they have to connect to the customer's ecosystem. Now, in these days, especially when we are in the world of open banking, there's a lot of discussion around ecosystem banking, right? But a lot of those conversations are typically centered around banks opening up their infrastructure and their data for to the outside world, and where they can create an ecosystem by connecting to the fintechs, right? So which is very important, and that creates a lot of value. But often we have seen conversation around the customer is lost in that discussion. It's more it gets into, okay, creating this partnership, bringing as many fintechs as possible, but then how are we creating the value for the customer? That is often lost in that conversation, and a lot of those discussions end up becoming a technology conversation. So that's where we felt that it's very important to talk about the customer's ecosystem. So one, to be omnipresent, they have to financial service institution have to be continuously present in the day-to-day life of the customer, in every event of the customer's daily life. And to do that, they have to connect to the customer's ecosystem. So whatever they are doing, in the morning the customer is going to a grocery store and picking up their daily milk and bread. Is the bank there, right? They're in the evening they're going out with friends to party. It's the bank there along with them. So at every stage of their life. So, and that's where the proposition that we have been focusing over the years, what we call is as omnipresence ecosystem banking, right? So with that proposition, I think it's we have achieved a great feat this year when IBS ranked us among the top 5 digital banking proposition in the world, and this proves that the approach that we had been taking is quite well accepted. And what we also, as a company, we started our journey. We are we are a Bangalore headquartered company, but we started our journey in Africa. And in a way, we consider ourselves lucky in that way, because Africa has been in forefront of digital financial innovation, much ahead of the curve in a lot of other geographies, right? Because I think the regulators, the banks, they realize that to address the challenges that they have to rely on digital. And there was a lot of innovation that has gone in that market, specifically around the last mile delivery. How do I connect to the customer through that last mile touch points, right? And that's what we have been quite heavily involved over the years. And a lot of the innovations now that we have done over the last 10 years, we see a lot of acceptance and being talked about, like whether it's in form of agency banking or cardless withdrawal, and a lot of other innovations is being talked about in a lot of other geographies, which now we are expanding, and now we have presence in different parts of the world with customer base in different regions and geographies. with end customer base of around 34 million plus end customers running on our platform. So being in this space and using and helping banks use digital to leverage their growth. Something that we realized is that there are, for any bank moving into the digital space, right? Whether it's an existing bank setting up a parallel digital entity, or a new digital offer, or a completely new digital entity altogether, all the three categories that you mentioned. There are three primary areas that that are of key considerations for them, right? So the first and foremost is that, okay, I've created a proposition, okay, a digital proposition, but then how do I get customers? And that is one of the biggest challenge that a lot of the digital, whether it's a pure play digital entity or even a parallel digital entity of a existing bank, is that how do I go out and acquire new customers onto this new digital platform that I've launched. And that is where a lot of the digital propositions that have come into the market have struggled over the years. Now, to that effect, of course, in recent times, there has been a lot of discussions around self-onboarding, right, or remote onboarding. And I'm quite happy to share, that Africa has been quite ahead of the curve in that space as well, right? So where a lot of the geographies right now are trying to get into a mode where they want to onboard customers outside their traditional model, which was branch-based onboarding. So whether it's mobile-based onboarding or other forms of onboarding. We have been in this remote onboarding space in Africa since 2012, 2013, right? Many people outside Africa probably would not realize that fact, that the banks in Africa, and specifically in East Africa and the associated regions, have been in that space and going out and enabling customers to onboard themselves using the mobile, right? And we were part of that journey. Now, of course, with new technologies coming into the picture, specifically with AI, we have been able to develop that further and have capabilities like AI-based onboarding, like facial recognition, ID verification, ID proofing, and matching a customer selfie with the ID, picture in the ID, verification. And then connecting to the central database, and so a lot of those things have come in, right? And there are a lot of flavors have also have been there. So one of the things was that, okay, you have a mobile, you have an app, embed your this AI-based self onboarding onto the app itself as part of the onboarding journey within the app. But the challenge that we have seen, and because we have been doing this for some time, we have seen multiple permutations and combinations. And the challenge that we have seen, that putting the AI or the self-onboarding as part of the app is definitely a good option, but there's a dependency. And the dependency is that we are expecting the customer to first download the app and then go through that onboarding process. That itself can sometimes and quite often becomes a roadblock, okay? And it is often seen, and there are multiple research data that is available in the market, and which has shown time and again that in case of digital onboarding, the dropout is anything between 60 to 70%, or even sometimes more, than a branch-based onboarding, which was which is typically 15 to 20% drop off. So so the whole idea is that how we can make that process easy for the customer. So what we have done is that the ability for the bank to put, for example, QR codes in different locations. then the customer can, can just scan that QR code, and then they are taken to, to an URL, through which they can do the onboarding process. So without even downloading the app, they can then go through the onboarding, and once their account is opened, then they have the capability to then go and go out and download the app. So that has had improved the rate of onboarding from the customer perspective, making that piece of change. But at the same time, what we have also seen is that just relying on self-onboarding, right, howsoever fancy concept it might be, with new technologies coming in and all those stuffs, but still it is very important for a digital bank, or even a conventional bank who has a parallel digital entity, to have alternate mechanisms for the customers to onboard themselves, and also alternate mechanisms for the bank to reach out to the customer and go out to the customer and onboard them. And that is where there has been a big focus from our side on the alternate channels as well. Because for us, we believe that alternate is digital as well. Okay, mobile is the primary channel, but then there are so many other touch points that the customer has in their daily life. Can a bank leverage on those channels as well and deliver capabilities and services and connect to the customers? And that leveraging on those alternate channels has been a big success for in multiple geographies, whether it's in Africa or even outside Africa. So and it's also one big thing is that when you are leveraging the existing infrastructure that somebody else has put in, okay, and using that infrastructure to onboard customers. So the customer can just go to the nearby, let's say grocery store, and then go and onboard themselves, right? When they are picking up that milk and bread, that example that I mentioned, right? So that gives them that additional layer of flexibility and connection, right? So the other form that we have seen, though it might not be very relevant directly from GCC context, but the moment which already has a very big smartphone penetration in that in that region, almost in certain places is more than 80, and even I think in UAE it's almost 99%. But if you step out of the GCC market, there are other regions in MENA, and also let's say if you go to Asia and a lot of other countries, other emerging markets, you will see there is almost sometimes 40% of the mobile phone population are still using the feature phones. But does that mean as a bank you cannot let a self-onboarding process for those set of customers? That is something that we have also addressed. So a lot of our customers, where we our partner banks who we service, besides the AI onboarding and the neighborhood onboarding, we have also enabled this USSD based onboarding, where a customer, even using a USSD phone, can onboard themselves using their mobile, right? And this becomes very, very important for markets where there is a 30, 40, or even certain cases 50% of feature phones. And one interesting fact, because we have seen these things very closely, a very interesting fact is that what we have noticed is that though in some of these markets, a customer uses smartphone, but when they want to use a banking service, quite a large chunk of them goes back and starts using USSD. So they are using a smartphone, but when they have to use a banking service, they would use a USSD. This is again, we have learned with very interesting nuances, and one of the there are multiple reasons behind it, but two common reason is that the perception that it is secure, okay, and the other part is that it is faster than using an app, right, in terms of the response time. So these are various ways that we have tried to address the customer acquisition aspect and the challenges. And then once the customer is acquired, then the question is that how do you deliver the services? Okay, and that is where the last mile connection comes in. And there are different ways that we have been doing for our partner banks. So of course, as I mentioned, and as an extension to, as I using the alternate channels and using third party to represent you as a bank and deliver services through those entities. So that's where there's, we have been the first one to launch agency banking in East African market, which was the originator of the whole agency banking concept, together with a bank called Equity Bank, which now processes around 10 million plus customers and 1 million plus transactions every day. So agency banking, then you have got, then how do you bring the bank to the customer? So you can have these agents go out in the market and go where the customer is and deliver services. But at the same time, you can have your customer service people mobile, just using a mobile phone, out there in the field, going out and delivering services to the customer. Okay, so extending services right at the doorstep, and then also leveraging. In recent times, we have seen a lot of in-store banking capabilities where large supermarket chains and convenience store chains wants to become the service delivery point for banks, and so they become a common service delivery point for multiple banks. So putting that capability in place so that banking and financial services can be delivered at the sales till at a supermarket or any convenience store point. And another interesting thing is the social banking. Social media is another channel which is coming up where customers are interacting day in and day out, right? So can I leverage that social media to start delivering banking services, my financial services? So that's where we had launched something which is called social banking, or also social commerce, which is platform independent, which means that you can be on any kind of social media platform, whether it's Facebook, Viber, Line, or Podium, or anything, right? But at the click of the tap of a button on the keyboard, like an emoji button, your keyboard gets converted to a service delivery point for the bank, right? So your keyboard gets converted, if I put it very simply, like a mobile app. So while you are already on that social media channel, you can do a transaction and execute a transaction there itself, right? So and that is also resulting in a lot of social social commerce as well. So because in a lot of the countries, in a lot of the social media platforms are being used for commercial transactions. So while you are doing that transaction, you can execute a transaction through the social media. But the beauty of it is that you're not consuming the APIs of the social media, so it's completely secure. But yet you're simulating that experience. So again, once you acquire, then you start delivering. But then the question is that what do you deliver, right? So that is where the service innovation comes in. Okay, and something that you have very rightly pointed out, that a lot of the digital propositions have been focused around making a very fancy UX, coming up with some nice looking credit cards, debit cards, and so on and so forth. But that's I think it's very at a very surface level, okay, and the novelty experience lasts for a certain period, but then it's lost. But then the question is that, am I creating services which really connects to my customer on a continuous day-to-day life? Okay, can I offer, let's say, if I'm going to a if my customer is going to a grocery shopping, right? He has bought, let's say, $200 of grocery, and then at the when he is checking out, or he or she is checking out, there itself I can offer him a credit then and there, saying that, okay, you know, can he, it's like, I do not need a credit card anymore, right? I just give them a credit line which they can use instantly, assessing them, creating, giving them assessing them on the fly and extending a credit line to them. Micro savings, right? It's imagine a situation where I go to you go to a shop, right? Your bill is $180. You give you give $100. Then the shopkeeper tells you, sir, I can give you the $20 back, or you can put this $20 in this fixed deposit or any other, let's say any other form of investment for 30 days. Okay, and you will get, let's say, 2.5% interest, right? So what you are doing is you are converting your banking product into an impulse good that you can put in front of the customer in a shelf, okay, which can be consumed instantly when they're checking out. Typically in a supermarket, if you see in the checkout counter, you have these small things which are kept, right, which you just pick up, you don't even bother about it. So some of these things which are we have created in the past and which are becoming quite popular and of some interest, right? Whether it's a POS lending, DGQ, where managing footfalls in branches and figuring out which branch has more footfall and directing the customer to the branch which is lesser crowding. Group savings, group lending is basically a very popular proposition with some of our customers, where enabling banks to create, or sorry, not banks, but a bank's customer to create, to come together, create piggy banks, virtual piggy banks on the fly, right? Where people can contribute and build that savings base for that group. So and there are multiple others capabilities that you see here, whether it's SME cash management, instant loans, and loyalty and rewards. So and there are many others, right? So that's where the innovation of services happens in terms of things which matters and solves their day-to-day problems, right? So this is our platform that we have built over the years, of course. So it's an end-to-end stack. We have the integration layer. We don't do core banking, so we sit on top of a core banking system and enable the whole digital capability. So we have the whole composable banking layer, which enables the bank to abstract the backend core and create digital products and services within this particular layer. Then you have the complete engagement, the customer engagement layer, and there are various kinds, whether it's web, mobile, wallet, agents, doorstep, POS, MPOS, and others. We don't do ATMs, but we have the ability to deliver services by connecting to a switch onto an ATM. And then we have this whole Lego of services that we have created, which can be taken individually as well. And the beauty of the platform is that depending on where the bank is in their digital transformation journey, and they can either go for the full stack, or they can pick and choose any pieces from there, whether it's any part of the Lego or only the composable banking or any of the engagement layers, right? And we can deliver services to our own engagement layer by composing service at the back end, or we can, through APIs, we can take those services and deliver it to a third-party channels as well, which is very relevant in cases where a bank already has invested in a stack, but then want a specific service which they want to enable in that stack. They can pick that and plug it into the particular capability.
Right? Lego banking, that's a very interesting term, and I notice a children banking block in there as well. So there's a good connection with Lego banking there. Right. That's interesting.
Yeah, very. So this is we have been engaging with financial institutions of different kinds. Large, complex organization, multi-country operations. More than 10 million customer base, processing almost 1 million transactions a day, to even pure play digital banks as well, right? And of different large banks to mid to small tier banks as well, right? Yep. So that's it from my side.
Excellent, Roy. I think I'll probably come back to you with some questions, and we probably give some time to Venkat now to just give us his thoughts in terms of his presentation. I'm just trying to see if we can. Venkat is. I know Venkat was facing some challenges with his network. I just want to check, Venkat, if
Yeah, now it's fine.
You're fine. You're here. Okay,
Right.
great.
Yeah.
Perfect. So please, over to you, Venkat.
Yeah. So good morning, good afternoon. So all of you, warm welcome to this webinar. It's a very interesting topic which we are doing as a webinar today. So to start with, in the next 12 to 15 minutes, I'll be covering more on the digital onboarding, as well as the digital enabler, as well as the technology side of digital banking. So just to start with Explio, so just to start with a brief about Explio, we are a part of a larger Explio group with around 15,000 employees with a 1.1 billion revenue. So we are in the space of BFSI technology consulting, as well as the quality assurance space. So we have recognized as one of the Nelson Hall's next generation digital software testing services. So I mean, that's about Explio in brief. So we'll just quickly move on. Yeah. So I would like to spend some time over here in terms of what are all the key factors which is driving the digital change. See, what Indranil has told is more on the onboarding side. I'm going a bit above onboarding side since onboarding is fairly covered by Basu. So we are just touching upon the onboarding and going a little bit above, over and above on the technology side also. So these are all some of the key factors which is driving the digital change. As you know very well, some of the business models, we have financial inclusions, we have payment options, customer centricity, and the technology side. So just to put some of the things in perspective is first, let us go with the financial inclusion. Okay. So if you see typically around the world, we have around 40% of the unbanked adults are there in the world, majorly who has not been banking. Okay. See, specifically contributed by India, China, and Indonesia, the major portion I'm telling. Okay, so there may be a lot of reasons behind this. Some of these reasons may be because of the cost, affordability, and the distance. Okay, these are all some of the reasons because they are in rural areas specifically. So with the revolution of the mobile revolution and some of the key government initiatives and the regulatory support, if you see the financial inclusion has kept pace in the last 1 decade. So if you see there is a lot of active participation from the rural areas specifically, since we have a lot of digital onboarding channels as well as the payment channels. So that's on the financial inclusions, which is one of the enabler. So moving on, next is on the business models. So as Basu has also mentioned rightly, there are a lot of business models. Just to name a few over here is, he has also mentioned rightly, banking as a service provider, where the front end of the non-banking service provider has been connected to the banks via API, and they can offer all their digital lending services. This is one of the key business model now most of the people are adopting. And of course, just to touch upon another business model quickly is on the account aggregator. Now, this is a very famous business model where a lot of players in the market was doing this. This service is basically just to aggregate the data from different banks and financial institutions for a lot of various customization, as well as personal finance management and other stuff. So this is another business model. These are all some of the business model which is driving the digital change. So moving on is on the this is a very important one, which is the customer centricity we are talking about. So I've just listed on some 3 or 4 customer centricity basically, which is on the contextual, behavioral, segmentation, as well as the location based. So you know all these areas. So if you take the location-based personalization, so based on the customer location, either it may be macro or a micro location, so the content will be delivered based on that on a real-time basis. So if you see, the important one is on the behavioral personalization. So based on the customer's behavioral, okay, using the technology of artificial intelligence and other stuff, based on the customer's behavioral, personalization will be made. So that is one important aspect. And apart from that, on the contextual personalization, if you see, there are different contexts where personalization can happen. If somebody who is touring somewhere, okay, so I mean, based on their needs, the personalization can be provided, okay, based on their previous browsing histories and other stuff. So based on the context, personalization can be given. And apart from that, segment-based personalization, you have preferred customers, you have a segment of customers who is having a browsing history, who is looking for separate things. So based on that also, we can give the personalization. So these are all some of the customer centricity personalization, which we thought, okay, which is a driving factor behind the digital change. So apart from this, you have a lot of payment options, which Basu also talked about. We have QR and NFC, QR code based and NFC based, and we have voice enabled based and biometric, which is gaining prominence nowadays with the facial recognition. So there are a lot of other stuff on the technology side, which I'll be covering in the coming slides. So quickly moving on to the next slide is, see, what are all the key industry challenges which currently we are facing in terms of digitalization. Just to list few of those things are onboarding, which Basu has spoken in detail, and compliance and regulations, quality assurance, which currently we are into, and technology changes. So quickly moving on to the onboarding challenges. If you see, Basu has technically spoken about a lot of things in terms of Ussd, in terms of artificial intelligence onboarding and other stuff. So I'm shifting a little bit away from that, since we have heard a lot of things from him. So basically, a lot of other challenges which we are seeing is there are a lot of time-consuming process which on the onboarding process, which we have seen in several websites and which in several financial institutions, which is really highlighting the customers. And apart from that, if you see, there are a lot of data-related issues and UI UX related issues. So, and also banks and financial institutions nowadays not taking the feedback also very seriously. So that is some of the onboarding challenges which we are seeing. Of course, in terms of technology, we can see the major area which we can see as the challenge is the integration of platforms. If you see, a lot of integration which needs to be done in terms of devices. If you see day in and day out on a weekly basis, we are getting new mobile devices launching in the market. A lot of social media integration needs to be done. All these integration needs to be done in terms of both scalability as well as security. So that's the major area which company are facing challenges. And in terms of quality assurance, if you see again, we are looking at a dynamic device support. If you see, as I already told you, day in and day out or every week, we have a lot of mobile devices which is getting launched. So testing all those devices on a dynamic way will be a major challenge. And apart from that, you have data-related challenges due to the lot of federal regulations which is there in the banking industry. So that is also posing a serious challenges on the quality assurance side. Of course, another one is on the data, which is very critical and important nowadays. The data security, since the digital banking is not only digital banking, apart from that, a lot of websites and banking of the soft targets for the hackers who are doing monetary transactions. So data security is also one of the key area which I feel that it's a key industry challenge. So apart from that, apart from that, if you see the regulatory and compliance also. Yeah, just quickly moving on. So what are all, see, we have gone through what are all the key challenges and what are all the digital enablers and what are all the key onboarding process, which Basu has also spoke in detail. Okay. So now what are all the key business solution and key benefits which is available in the market? I've just listed some of these things such as robotic process automation. We have augmented reality, open APIs, blockchain. These are all some of the key features which we are having. So if you typically see a process automation will actually emulate the human actions interacting with the digital device and softwares. That's how. So what happens is it will make life easier and faster and more consistently it will perform. And in terms of artificial intelligence, you know very well, it actually mimics the human intelligence with smart mission capability. So in terms of AR, augmented reality, AR, we can see on the banking side, it is gaining prominence where a lot of AR related branches is getting open, virtual branches is getting open, and customers are getting engaged more on a personalized way. So if you typically see, there are a lot of key features in the latest technology, in the next gen banking solutions, where there are a lot of features which has been enabled. Of course, blockchain is there, which I'm covering in the coming slides. So there are a lot of benefits which it is giving to the customers, such as there are a lot of API-led payments which is happening. And of course, blockchain-led payments, analytics is driving the market, which is very key to the market. And of course, it is creating a lot of business agility. And finally, it will give us more, it is a more cost-effective and in a more secured way. So, I mean, that's it on the emerging thing. So if you quickly moving on, this is a typical landscape where we are having on the emerging technologies where it is impacting the digital banking, where you can see from now down the line to 5 years, around 10 years and 15 years, how it is impacting in terms of artificial intelligence or a digital platform or an immersive experience. So you can see on the left-hand side block, you can see there are a lot of areas such as IoT, we have edge computing, we have software-defined security, we have augmented reality, deep learning and machine learnings, even drones. So there are a lot of items on the 5 years side. Just to brief about some of these areas, you know very well, the extension of the artificial intelligence. In fact, this is an application inbuilt in the artificial intelligence, which is the machine learning, where these machines are automatically learn and improve from the experience without being explicitly programmed. That's the way the technology is moving forward. So in banking, if you see predominantly a lot of these technology has been used advanced in the advanced fraud detection or personalized financial management or in the customer retention areas. So moving on quickly, an extension to the machine learning is the deep learning, which is again will mimic the working of the human brain completely in the same way. But only difference between machine learning and the deep learning is machine learning will use the algorithms and will have an informed decisions on that. But if you see on the other side, deep learning will structure algorithms. That's the basic difference. And apart from that, it will also make some intelligent decisions. So, I mean, that's on the, just to touch upon, that's on the machine learning and the deep learning. Moving on is IoT, which is one important area on the technology side, which is evolving right now in the banking sector also. So if you see specifically, IoT is an interrelated, interconnected object where it will collect and transmit data over the wireless network. So in the banking, if you see this has been used considerably in the areas both in onboarding as well as in the payment side. You can call it as a wearables or a KYC or on the personal financial management or even on the insurance side. So finally, on the 5 years side, if you see, we have edge computing. So this is again an extension of the IoT. If you see, edge computing has been used in the IoT where what happens is the response from the edge computing is far higher, and it will also save bandwidth because it is very closer to the user location. So this is again one more technology which is gaining prominence and which is an extension of the IoT actually. Moving on quickly, no, can you just go back? Okay, so moving on quickly on the 10 years side, we have smart robots, we have quantum computing, blockchain, smart dust, and other area. I mean, quickly, in the interest of time, I'll touch upon a couple of items specifically on the blockchain. So if you see a blockchain is essentially a digital leader where it is on the distributed network, where on the banking side, if you see a lot of supply chain finance, or on the digital currency, if you see, or a digital wallet, or you have trade finance who is completely working on blockchain nowadays. So it is very difficult and impossible to change, hack, or cheat this system. So that's a short brief about blockchain technology. And if you quickly move on, we have virtual assistants. Again, it's a cloud-based program which is interconnected. You have a lot of virtual assistants nowadays, such as examples such as Siri or Google Assistants. A small difference between a virtual assistant and the a chatbot is a virtual assistant little bit intelligent. It has the cognitive abilities and NLP processing. So it is intelligently built. So that is on the virtual assistants. And of course, moving on quickly, since we have on the 15 years, these are all very new technology, which is still in the nasal stages, which is in the research stages. We have brain computing interfaces, human augmentation, 4D printing. So if you see, typically brain computing interfaces is allowing the users to communicate or control external devices using the brain signals. So it's a phenomenal technology. That's the kind of technology which we are going to look forward in down the line in 15 years. So quickly moving on, artificial general intelligence is another one area where, I mean, what is the difference between artificial intelligence and the artificial general intelligence is artificial general intelligence, it's actually mimic the complete human intelligence. So it will work on its own like a human brain. So this is it on the technology part. So I'll spend a couple of minutes quickly on the on our implementation for one of the public sector in India, which is a major public sector. It has around 650 branches. The scope of this particular implementation is basically they are going with the core banking on Finacle with a lot of channels. And on the digital side, they are going with a lot of digital payments. Of course, these people are a perfect example for a financial inclusions. So they have a lot of payment processing, which we have done. This is on in India. So like Aadhaar enabled payments, we have cash management, we have business correspondents taking their handheld devices. So there are a lot of payment gateways which we also tested as part of this, such as SFMS, NACH, UPI, and other stuff. So, I mean, in this particular implementation, we have thoroughly entered into the quality assurance side completely, both in core banking as well as the digital payment side end to end, and it was successfully implemented. So, and on time, on delivery, successfully implemented. So, apart from from our initial initial point on the second level, what we have done is we have completely automated the end-to-end solution as part of the quality assurance. So that's an important aspect what we have done as part of this customer is concerned. So, I mean, that's it from my side.
Thank you.
Of course, since Basu has touched a lot of areas in terms of onboarding, I've just moved a little bit away from that, and I've spoken a lot about the technology side.
No, thank you. That was really good, Venkat. I think that leads us, nicely into some questions, and we have a few minutes to try and answer that. I think, one of them to you, Roy, is in terms of, the QR that you mentioned. This is a question from Mohammed Danish. In terms of the QR without installing the app for onboarding process. I think the question here is, where has this been implemented, and what are the security challenges that may, be faced in this kind of process? Roy, you're on mute.
I was on mute.
Yeah.
Common digital challenge.
Yeah, exactly.
Okay, so look, we have been doing this for some time, and see the QR thing is that we have introduced based on what we have seen, the challenges that we have seen. Just putting SDKs on the mobile in terms of the actual outcome in terms, where people onboarding themselves. So what the QR is doing is, everybody knows that, QR is what QR is doing. It's just encoding some information, right? So the same way, when you're, scanning the QR, it is actually taking to the bank's onboarding website. So it follows any web security and firewall and proxy, whatever that are there related to security for any bank's general website. So from security perspective, it is nothing different from any maybe your internet banking security that will be there, right? So so similar kind of infrastructure. It's just that QR is taking you to an URL which contains that that onboarding journey, from taking the selfie to liveness detection to scanning the ID, OCR-ing the IDs, and then verifying the IDs and the picture and stuff like that. So
Sure.
so that it's pretty standardized. Yeah.
Great. Okay, thanks for that, Roy. Venkat, a quick question for you. So obviously, banks have multiple options when you look at digital initiatives, right? It can be across any kind of digital initiatives. How best do you think a bank should go about prioritizing these digital initiatives when they look towards digital banking? You're on mute as well.
Sorry about that. So it all goes with the region which is got located and what kind of a priority which the bank is having. So basically, if you see, all these digital banking is componenting all their minimum viable products. To start with, they'll start with a minimum viable product, and then they will extend their arms to a lot of other areas, such as even for that matter, now a lot of corporate banking is gaining prominence. So it all depends upon, they just start with a minimum viable product, and then they will extending their arms to agency banking, as they rightly told, towards the rural population with a lot of handheld devices and other stuff. In fact, they can also extend all these things to a lot of other areas, such as supply chain finance. We have trade finance and the corporate digital banking. So that's the way most of the banks is getting started with the digital side.
Okay, thanks for that, Venkat.
Sorry,
please,
I think Mohammed Danish had sent a follow-up question just to clarify that whether it has been done somewhere. Yes, it has been done.
Okay.
Yeah.
Fair enough. I think, as you know, obviously it's a really interesting topic, and the points you all have raised are obviously very engaging to the audience, and I can see there are a few more questions. Unfortunately, we are completely out of time right here, which just leaves me enough time to thank first the audience for participating and engaging with us. And secondly, our panel members, Roy and Venkat, thank you so much for taking the time, sharing your inputs. Really enjoyed having you on board, and hope to see you soon. So from all of us here on the panel and at CedarIBSI, I'd like to say thank you everyone for joining, and stay safe. Thank you.
Thank you very much.
Thank you.